Is it time to buy or sell Africa? First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So, we go here and we do look at Africa. So this is the AFK ETF from VanEck Vectors. And we do have a 16-ish% move here from the 52-week low, and we have seen a 6% pullback. Okay, so let's jump here right into the charts. So this is the big picture weekly data points, and yeah, this market has been through all kinds of things. We have had some bull markets, some bear markets, some bull markets, and some bear markets throughout an overall, bull market, globally. We do see that there are some time cycles that have been rather good at least capturing the major impulse. The current part of the time cycle it's kind of supposed to end, and we have seen this weakness, but there's a rising phase here right around the corner, which is interesting. If we zoom in a bit here, you could argue that we have something that looks a bit inverse head and shoulder-ish. So here we have the head, and here we have modest right shoulder. So this is definitively it's interesting. It certainly is even more interesting that we are above this red 200 week moving average, which it has been a key level in the past. Let's go to the daily data points. And in this instance, you do have the red 200-day moving average. It was very good support in the past, but you see here recently, due to this price action, it's become more messy. So you could argue that on the daily data point, we have a small inverse head and shoulders pattern. Which, it is a bullish technical pattern. As far as, the 200-day moving average goes, it's simply become very messy due to the slicing and the dicing of that moving average. But it is still relevant. But it's a cleaner trade when you have something like this, and then you have some bounce from support, and then you can easily buy and have a clear stop. When you have these events, you need to just find what is the key pattern, and I do think that this inverse head and shoulders pattern here is rather interesting, because we used the green 50-day moving average also here to potentially form that right shoulder. So from a technical perspective, I would lean bullish. So yeah, you could also certainly make the case that we have a bunch of horizontal support here as well. Okay, so let's look at these other indicators like this. So weekly data points, we do actually see some bullish divergence here between price and accumulation distribution. So there are buyers here, that's definitively interesting. Yeah, nothing really is special here on the other indicators. You could argue that the PPO here on the 100-week moving average, it might be a bit elevated. Sometimes in the past we have seen corrections, but I think that this time here it is markedly different because we were so much higher on these other PPOs, the 20-week moving average and the 50-week moving average. So I do think that this consolidation phase, nothing really in particular happening, it changes the dynamics. So yeah, I wouldn't be especially worried about the 100-week PPO. It's more the case that if we have extreme high readings on across the PPOs, that's when you should be considering some bearish positions, and also of course the opposite. Yeah, so here on the daily data points, accumulation distribution has flatlined a bit, so there's definitively you do have uncertainty here among the investors. Yeah, but I think that if we sum up the technical case here with the major inverse head and shoulders pattern and also this small one, I do think that it simply is too interesting. So I would lean bullish. Okay, so here are some correlations. So you see here that there's long-term a 41% positive with the S&P 500, 83% positive with the Frontier Markets ETF, FM, And then you have a 96% positive with the South Africa ETF EZA. Then minus 46% negative with the dollar index. Looking at the daily data points, you see here that during this massive consolidation phase, the correlations have just changed very substantially here with the S&P 500 and the frontier markets. So minus 20% here with S&P 500, minus 19%, very similar with the frontier markets. Though we do have a strong 83% positive with South Africa. Then minus 72% negative with the dollar index. This is why it is very important to look at, both the long-term and also the short-term correlations, and to look at it like this, because if you only look at the number and don't see like it, over time, then it's very easy to get, fooled by correlations. So always, get that, the bigger picture you get, the more informed decision you can make. So looking at AFK over the last 5 years, the bullish case strengthens very substantially. November is the strongest month, December is also pretty decent, and January is also strong. Over the last 10 years, you do see that November, it's 50-50, nothing dramatically bullish or bearish here. Then you have December as a very strong month, and then over the last 14 years, November is weak. But the weakness of November could also mean that it's a good month to enter, in a position. December is one of the stronger months. So December is definitely very interesting here, and also to be positioned for December. Looking here at Finviz, we do have some trend lines bouncing here from support. We do have some resistance above us. If you look here at, if we compare AFK, the South Africa ETF, with the S&P 500, and look at the price earnings, then S&P 500 is 98% above, so almost double price earnings. So definitively there's value here in Africa. Looking at the dividend, so you have a 3.73% dividend here for South Africa and 1.22% for America, so definitively much deeper dividend. So to sum up the take here, the technical picture is interesting, the seasonality is also interesting, you get a nice dividend, there's value, so I think that there's more reasons to be bullish than bearish, but we always want to have stops in place.